Hey guys, so in today's video, I'm going to be breaking down an absolutely beautiful 2.1% trade that we took on GBP USD just yesterday. When it comes to taking a trade, the first thing that we have to understand is where we are in terms of structure. This is the entire reason why we do a weekly outlook every single Sunday inside of the VIP group, so that all of the members can understand exactly what I'm looking at for each pair that we trade and exactly what I'm anticipating in the coming weeks and where we are in terms of that particular structure itself. So taking a look at GU on the daily time frame, the first thing that we can understand is that we are very bullish. We've just put in this higher high and price has given us this deep retracement to give us this higher low, and now we should anticipate a higher high and a break above this previous higher high, right? So the daily is very, very bullish. However, it's a little bit of a different story when we go down to the 4 hourly, because the 4 hourly is giving us a series of lower lows, lower highs, and lower lows. Therefore, if we just base our trading analysis off of the 4 hourly, then we should only be looking for shorting positions. So this is a key reason as to why we ended up taking a short position, and it is kind of mixing a multitude of different strategies together to make a whole big strategy in itself. So first and foremost, let's quickly highlight that this right here is now our previous lower high. This means if we take this out, then the likelihood of price continuing in a bullish manner is very high, because the 4 hourly will have then essentially given us a market structure shift, meaning that the 4 hourly has now flipped bullish, which is in line with the daily. So this is something that we are actually looking for when it comes to our daily analysis. So now if we drop down to the hourly, what can we see? Well, first and foremost, we can see that we have now swept and broke above this previous lower high which we printed on the 4 hourly. So with that understanding, we should now anticipate some sort of a pullback, because now not only is the 4 hourly but also the hourly flipped bullish as we end up going and taking a short position. Well, first and foremost, we've swept this previous lower high. Once we sweep the previous lower high, that is a ton of liquidity that has just been swept. So understanding that, we can now drop down to the 5 minute, and the second confluence that we had was that we also swept the Asia high. So not only did we sweep the previous lower high on the 4 hourly, but we also swept the Asia high, and then from there we had this impulsive move to the upside, and then the volume started to slow down and we started to build up all of this consolidation. Now in this leg of price right here, we've actually got a schematic 2 playing out. Now you guys are probably confused as to what schematic 2 all means. This is just one of the entry schematics that I teach within my VIP course, which is available inside of the VIP group, and the link for this is down in the description. But once I started to notice that we had this schematic number 2 playing out, I was like, I'm very interested in getting involved in these sells. So if I now continue to play price on, we can see that price gives us a sweep of the consolidation that was being built up right here. So we had super volume coming out of this sweep of the Asia high and a sweep of the previous lower high. From there, volume started to slow down and we had this build up of consolidation. From there, we had a sweep of that consolidation. And then after that, we had a market structure shift, which happened right there. So once all of this started to play out and entry schematic number 2 started to play out in line with the sweep of the Asia high and also sweep of the previous lower high, I was now very interested in getting involved. So this is exactly when I sent this GU sell limit into the VIP group, and I let everyone know that I was going to be entering off of the order block, which is placed right there, with a stop just above the high which took the liquidity, and then we were targeting the opposing liquidity, which in this case was the Asia lows. So we put our entry at this order block right here, and once the limits were set, we then simply let price play on. So if I play it on, we can see that we got tagged into this trade with very minimal drawdown. And after that, price did decide to rally away, and we actually got a break of structure right here, indicating that price was actually looking to continue its move in the direction that we intend. So our targets were all the way down here at the Asia lows for a nice 1 to 3.55 risk to reward trade. But unfortunately, that's not how this trade ends. We can see that price then goes into a mode of consolidation where we end up just consolidating for a total of 4 hours. Now, there's a very key lesson that you guys should learn from this trade, which is you can't just set and forget your trades. If you set and forget, it's all good and well, but 9 times out of 10, you're probably going to get stop lost or break even very quickly, or the majority of the times when you're not managing the trade, as opposed to when you are managing the trades and you're able to extract profits away. Now, the reason why I say this is because as soon as I started to see that price was consolidating, I was going to tell everyone in the VIP group to close the position at a plus 2.1% gain instead of waiting for a full take profit. Because if we go up to the 15-minute, what we can see is that price is heavily bullish. We've put in this higher high, higher low, higher high, and we've got this order block right here, which price tapped into, and we had this reaction away from. Now, when I identified this, I started to think that we've got news up and coming in around 30 minutes. Price has tapped into a bullish area of demand. We've had a reaction from it. We've struggled to sustain the bearish order flow. So it sounded like a good idea to exit the trade rather than hold the trade and potentially lose profits during the volatility of news. So this is again where I told everyone to exit the position, and we closed everything at a 2.1% instead of waiting for a full take profit. Now, it was lucky that I actually did that and I managed the trade correctly, because as we can see, immediately as news kicks in, the volume pushes price straight to number one, the break even, and then a few minutes later, we then actually would have been stop lossed out of this trade. So again, this is the importance of understanding where you are in terms of price action. Not only that, but also where you are in terms of all of the different time frames as you're doing your top-down analysis, so that you don't get caught off guard by potential lower time frame areas of supply and demand, which in this case, as we can see, we tapped into this area of demand, and then price decided to continue in the overall pro trend direction anyway. So again, this trade was counter trend, which is why we did manage it aggressively, and we did also take profits aggressively. Not only that, but we also had news incoming. So all of these factors put together, it was just a better decision to exit the trade rather than try and stay in and squeeze a little bit more out of it, because 2.1% is still $2,100 on a 100K account. That is a lot of money compared to what you would make on an average salary at work, for example. So I hope you guys got some knowledge from understanding that you have to understand where you are in the entire range of price, from your top-down analysis all the way down to your lower time frames. And also the understanding that you can't just set the trade and forget it. You have to make sure you understand where all of the different areas of supply and demand are, and you make sure you manage the trade accordingly. If you do this, you'll be able to extract profits from the market more often than not. And at the same time, you won't get break even as much or stop loss as much, because you're going to know where your higher time frames and lower time frames are standing. So again, if we go up to the daily time frame, we can see that price is super bullish. The 4-hourly is again super bullish. We've just broken out of this bearish market by putting in a brand new higher high and getting that market structure shift on the 4-hourly. And again, it's a similar story when we drop down to the hourly, where we're super bullish, and also the 15 minutes. So every single time frame was telling us that we are bullish. Yes, we took the short position, which is counter trend, and we took it based off of other confluences, and the trade ended up working out. But we didn't rely on just that one piece of information to sustain that entire move. We made sure we understood that overall we're bullish. So let's not try and aim for these higher targets. Let's understand that, it's okay to take profits early and to manage the trade accordingly. And that's that. And that's a wrap. So I hope by now you guys have really understood how you're going to do your top-down analysis to understand where each and every time frame is at in terms of its structure. Not only that, but I hope by now you guys also understand that you mustn't enter a trade and forget about it. You must always make sure that you understand what the time frames are telling you, what structure is telling you, so that you can manage that trade accordingly, whether it be passively or aggressively, and take profits without waiting for it to go to your full take profit, because sometimes price can reverse and take you out at break even, or worse, if you haven't gone break even, take you out as a stop loss after floating in profit. So I hope you guys did enjoy this video, and if you did, again, please don't forget to leave a like, comment and subscribe. But on that note, I'll catch you guys in the next video.